because there simply isn't going to be the physical silver there. They're going to say, I'm sorry, only our industrial customers are going to be able to take delivery. Everyone else who has a futures contract, we're going to have to settle in US dollars. And when they make that declaration, we're going to see huge moves in all the precious metals.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for September 15th through September 22nd, 2025, while supplies last. This week, 1 10th-ounce gold maple leaves are just $37.50 over melt per coin. 1 ounce assorted silver bars are just $1.65 over spot per ounce. We also have near historic low premiums on pre-1933 gold. Call us for details. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're glad to have this legendary returning guest. James Rawles is the founder of survivalblog.com. He's been a frequent visitor on Liberty and Finance since the very beginning, back when we were even called Reluctant Preppers, and he has an amazing preparedness resources available at survivalblog.com. James, thanks for coming back and joining us this Wednesday, September 17, 2025.
Thanks for having me on.
So much has been going on. We're going to touch on a number of topics today, including the gold and silver markets, an update on platinum, update on our financial outlook, economic outlook, perhaps geopolitical situations, and then how we come together as a country in order to be able to support each other in getting through challenging times. So can we first start off with your view of the current progress in the gold and silver markets, and if you want to touch on platinum and other commodities or other aspects of the financial markets at this time, please do.
Sure. Well, I'm sure your listeners have all noticed the bull market that's developing for gold and silver. Yesterday, I checked it at Kitco, and I was surprised to see that gold was up to $37.0980. That was an all-time high, at least an intraday high. And silver was at $42.83 an ounce. That's just amazing. But it's actually just confirmation of what I've seen coming for many, many years. Obviously, with our government's just chronic overspending, it is inevitable that the value of the dollar vis-a-vis gold and silver and platinum is going to fall. It's just inevitable. And I think that we're just seeing the beginning of a secular bull market in the last several years. And for folks who think that they have missed the boat, I've got to tell you, you haven't. At least you may be a little late on gold, but you're definitely not too late to buy silver or platinum. I think they're both very undervalued right now.
Yeah, we just interviewed recently Ed Steer, who has been a member of the Gold Antitrust Action Committee, GATA.org, for a long time, and a longtime working associate of Ted Butler as well. And he had similar sentiments to you, and also always emphasizes with us the extreme concentrated short position that still existed, both for platinum and for silver on the COMEX, for one, and the short physical supply situation in those. If you want to touch on that any further.
Well, there's definitely a physical shortage with the big trading houses. Certainly, we're seeing that on both the COMEX and especially the LBMA in London. At some point, they're simply not going to be able to keep their delivery promises. They keep stretching them out farther and farther out in calendar dates. They're what, 120 days out right now. They should be settling physically within 48 hours. And that's history. They haven't done that in many, many moons. So obviously there's a physical shortage. The demand in Asia is absolutely relentless. And whether we're talking India or China, and in fact, throughout Asia, there's a huge demand. And a lot of that demand is physical demand. They don't want paper gold. They don't want paper silver. They want the physical metal in their hands, and there's just not enough to go around. And the law of supply and demand dictates that when there's less of a supply than demand, that prices will rise. And of course, as I first mentioned, it's all indicative that the fiat money system that exists in virtually all the countries of the world right now is broken. And at some point, there's going to be some sort of a reset. And I think it's going to, in US dollar terms, we're probably going to see gold closer to $10,000 an ounce. If there's any, I don't think it'll be an official peg, but I think there's going to be, whether formally or informally, we're going to see radically higher prices for silver and gold. And platinum being more of a industrial metal, we'll see it go up as well, but not quite as much.
On that concept of pegging anything to a fiat currency that's in free fall, the official, well, anyway, it's a long story, but when we heard from Dr. Judy Shelton, former economic advisor to the first Trump administration, saying that in a closed-door meeting at the Fed, you had Janet Yellen trying to, well, actually effectively redefining price stability, stable pricing as one of them, which is one of the dual mandates of the Federal Reserve, from stable prices to a stable rate of change of prices, meaning stable rate of inflation. But that's even now gone by the wayside. So they were officially adopting, rather than zero, like 2% as their goal by policy for the last decade or so. And then that changed to admissions in the last year by Jerome Powell, that 3.6% or so. We can't even achieve that. And now with cutting rates today, it seems like it must be off to the races, and no holds barred in terms of whatever that means. So if the currency is going to continue to be devalued at an accelerating pace, and according to John Williams from shadowstats.com, who we've had on, they may claim 3.6% or whatever, but he says you got to add about 8% to that to get closer to the truth. So if the dollar is devaluing at somewhere between 8 to 11 or 12% per year, and you look at that compounding, you can't peg that to anything. Anything that's real or fixed, because am I missing something there?
No, I think that if people just step back and look at the big picture and realize that today we've got spot silver at $41.94 per troy ounce, that equates to a $1,000 face value bag of junk silver. And here we're just talking bullion value alone, not numismatic value, just bullion value, is $30,000, $30,300 in fact. So that means each silver dime in a $1,000 bag of junk silver, each dime is worth each silver dime is worth $3.03 a piece. Just think about that. $3 to buy a dime. That shows you how incredibly debased our currency has been since 1964. 64 is when our country basically lost its sanity monetarily. We haven't really had a real currency since then. What we have is pure fiat. We have a lot of wishful thinking, a lot of carryover from when the dollar really meant something. And it's just been a gradual decline over these decades, to the point where it's no wonder it costs, $3.50 to buy a gallon of gasoline right now. It's because the dollar is kindling at this point. It's not real money. And whether you look at it in terms of any real tangible of value, whether it's a gallon of gasoline or an ounce of gold, or it's a Colt Model 1911 pistol, if you lay all those side by side, you'll see that since 1964, those tangible items really haven't changed value that much. It's the dollar that's gone down. And the folks at the Federal Reserve and the U.S. Treasury have been effectively taxing us through a hidden form of taxation called inflation. And we've seen the gradual decline of the purchasing power of the dollar. And it's been inexorable. We haven't seen the end of it. And when we do see a sudden break, it's going to be really dramatic. It'll be traumatic. Because at some point, the world is going to have a emperor has no clothes moment, sans culottes. We're going to have people realize that the dollar really is worthless, along with all the rest of the paper currencies. They're all basically on the same path. Some are just in more of a hurry than others. We've been blessed here in the United States that the dollar has declined less than some other currencies. But again, they're all on the same path. And the folks at the Federal Reserve have essentially just been doing window dressing on a dead currency.
When you say that we're going to see a time when everybody sees that the emperor has no clothes on, would you judge that moment has already that ship has already sailed for international holders of U.S. dollars and U.S. bonds, and that they're only clinging to some of those because they haven't dumped them all yet, and because there may be some advantage there. Still, they haven't completely been able to separate from the necessity of having them for collateral for foreign trade, that sort of thing.
Ironically, the foreign holders of dollars are probably in a little better shape than we are, because the U.S. Treasury and the Federal Reserve recognize the only thing that's keeping the system afloat is the willingness of foreign bondholders to keep turning over U.S. Treasury paper. So they will do everything in their power to keep them happy. Their happiness is more important than the happiness of the American people. And if they have to stab anyone in the back, it'll be us first and them last.
And this hidden tax that you talk about from the debasement of the currency, let's talk about the impact both on international holders of the dollars, but also on domestic holders of the dollars, and how it's, I guess, one of quite regressive tax. It's been framed as that low-income people who rely on savings accounts and hourly earnings and that sort of thing, maybe get hurt the worst by that cash-denominated savings accounts rather than asset holders like the top 1%.
Well, yeah, it is highly regressive. And one thing that people don't recognize is the fact that because we have a gradually inflating currency, people are reluctant to leave their money in banks long term. So that's actually slowed investment. That's one reason that stocks have done as well as they are, because people look at those as a fractional holding of something tangible. And that's why, of course, precious metals have done so well, and why especially real estate has done so well over the last 50 years. Because they're basically the safe harbor for folks, because they're tangible, and people realize that there, at least, they have a chance of getting ahead. If they just leave money in the bank, it's just going to melt away. It's like sand through an hourglass. It's really an ugly situation. It's because of that, again, the investment that people would be making is not taking place. And instead, we have more or less of a casino situation with stocks and even with the cryptocurrencies, for example, where people are like, well, the dollar is trash, so this is the best I can do.
As you look at the situation currently, where do you feel that we're at in a timeline, or at least a progression? Do you expect to see a more rapid change and a more rapid degradation in foreign divestiture, international divesting of U.S. treasuries and U.S. dollars at an accelerating rate? And if so, how do you see that impacting the treasury bonds? How do you see that impacting holders of treasury bonds like municipal governments, insurance companies, endowments, and retirement funds, so on?
Well, I think that there's a lot of hope amongst the international community that the American economy will hang in there, especially with Trump in office. My fear is that when Trump leaves office, or shortly before, but perhaps right in the election cycle just before the next presidential election, there'll be an attempt to crash the economy, to make Trump look bad. And once that happens, then I think we'll see a very rapid decline in the dollar on the Forex, and we'll see a rapid rise of the metals on the COMEX.
And do you see any impact of that already happening, or you see that that's a future impact that you expect to see in the future markets only?
Well, the timing of all of this is really hard to judge, but again, I'm fairly confident that that, like, for example, just today, the Federal Reserve Open Market Committee met, and they did a 250 basis point move. And that was expected. And in fact, that full move was already baked into the cake in terms of all the markets. But at some point, raising interest rates is not going to be enough to keep foreign investors interested in American Treasury paper. And at some point, they're going to lose control of the situation so that they would have to offer, 15% or even 20%, almost analogous to the situation we saw in the late 1970s.
Yeah, Paul Volcker's coming to mind. That's right.
Yeah.
Mm-hmm.
So at that point, we could have a total, a psychological break. And if that happens, all bets are off. And God help anyone who is fully invested in dollar-denominated assets. At that point, their only safety, your only hope, will be intangibles.
For some time now, for example, on one of your websites where you sell antique firearms, you've had dual pricing structure. One is in Federal Reserve notes, as people would refer to it incorrectly as dollars, and other is in, I believe, ounces of silver or grams of silver.
Yeah, it was in
tell us more about that?
1965. I did that basically as kind of a teachable moment. For a few months, I went ahead and priced all the inventory of my antique guns at my side company, which is called Elk Creek Company. I priced everything in pre-1965 silver. And I had quite a few people go ahead and pay me in silver when they realized, hey, this is a bargain. Because at that point, silver was trading for around 20 times face value versus the dollar. So basically, if I were to price everything, say I had a antique gun that was priced at $100, that 20 times face value in silver would have meant, a radically lower price if you look at it in terms of $1964 in effect. So I left it that way probably for about 18 months, but there were so many people who were newbies that were confused by that. They're like, well, why does you have this gun priced at $35? Well, because that's in silver coins, you have to multiply by, at that time, it was like 20 or 21 times face value. Well, now we're up to 30 times face value. And it really shows you, just how far the dollar has fallen. It's really sad. People used to talk about the almighty dollar. Well, it's not so almighty anymore.
Turning our attention to the economy, the fact that the Fed cut interest rates today after already admitting that they can't control inflation down to hit their 2% target or even maybe their high 3% target. What does this signify, first of all, you think of what their, admitting, are they throwing in the towel here and going, oh, forget it, we're not really fighting inflation, we're going to try to save the banks and let the currency die if it has to? Do you think if that's the case, do you think that lesson is being lost on international observers or domestic observers, depending where they're at in the financial food chain? What's your view of them cutting it in the current environment?
At this point, the Federal Reserve is basically stuck because they can't radically lower or raise interest rates because they've run out. It's like a plane on a runway. They're running out of runway. If they cut rates, then there's gonna be further erosion of confidence in the dollar. If they raise rates, they're too much. They're going to crash the residential real estate market, the commercial real estate market, and the stock market. And not to mention car sales too, because most car sales are financed. Most people don't pay cash when they buy a car. They think in terms of their monthly payment rather than the absolute dollar price of the vehicle itself. So raising interest rates too much is basically going to shut down the economy. So at this point, the Federal Reserve is stuck. They can't move more than, at this point, about, more than a half percent either way. So they're stuck in a narrow range of interest rates. And if we end up with a international monetary crisis, with stuck like this, there's really not a lot they can do, and the U.S. dollar is going to feel the brunt of the pain.
Can we turn our attention to the concentrated short position on silver and platinum on the COMEX? There's been some rumblings over the past month that perhaps the largest bullion banks have covered up to even half of their massive record short position in silver. Do you have any insights in terms of what, and also, oh, by the way, silver having been added to the United States strategic materials list in the past month, do you believe that those two in combination or together combined will provide a floor underneath the silver demand and silver price that should support it more than perhaps has been for the last decade and a half or so, where it seems that the powers that be can pretty much have their way with the silver price on the COMEX by using forward futures and that sort of thing, paper trading?
Well, just 6 months ago, I was talking about a $32 floor under the price of silver. Now we're looking at more like a $40 floor under silver. And while both silver and platinum are undervalued, we can see that they're entering a cyclical or even secular bull market at this point. And I think that given the chronic shortages of both platinum and silver that exist worldwide, a lot of the moves in silver and platinum have been fairly large in percentage terms, and that's only because they're both relatively thin markets compared to gold. Most silver and platinum production is a byproduct of gold mining. They're not primarily mined by themselves. And the silver and platinum that are entering the market right now are primarily coming out of scrap and, out of the industrial market. And the shortages that exist are to the point where I think that the COMEX is going to have to, at some point, shut off the futures contracts and say, okay, we're only going to be able to make delivery to our industrial customers, customers like Kodak for silver, for example, or the dental industry for silver. Because there simply isn't going to be the physical silver there. They're going to say, I'm sorry, only our industrial customers are going to be able to take delivery. Everyone else who has a futures contract, we're going to have to settle in US dollars. And when they make that declaration, it's going to be we're going to see huge moves in all the precious metals. But that day is coming, and it'll probably be within a few years that we see that happen. And people need to be ready for that. And the only way you can really be ready for that is to physically hold metals in your possession. Don't have them on deposit anywhere. Don't take fractional shares. Don't trust warehousing somewhere. The only real surety that you have is that physical metal in your hand. Don't trust anything else.
Well, something like that happened a few years ago on the nickel market in London. Do you want to describe that to just a recent example?
And the very same thing could happen for both silver and platinum. And inevitably even gold, I suppose. But, silver and platinum are much thinner markets. And again, we've seen bigger price swings in them just simply because they are thinner markets. And there's been a tremendous amount of arbitrage that's gone on just between the Asia and the Western markets, because they realize that, there are the differences that exist there between the Asian demand and the Western demand is, the arbitrageurs can make a lot of money, and they do very regularly. And they make a lot of money just on the day-to-day swings in silver and platinum. If you look at the silver market, very typically on Monday morning, right after Monday morning Asian trading, silver goes up. And then by Wednesday or Thursday, at least on the COMEX and the London market, silver goes down because it's being short sold by the major, institutional investors. They realize that it's such a thin market, they can push that market, and they often do, and they make money week after week after week, and the generally dumb public really hasn't caught on to what's going on. Of course, they're the generally dumb public, the GDP as I call them, they're not trading in futures contracts. They're only looking at the spot market. That the arbitrageurs are making money consistently, knowing that the shorts are going to play their game late every week.
If we could turn our attention now to the overall global economy, there seems to be this growing separation, this divide between the BRICS plus nations and then the still London/New York centric sphere of Western financial influence. Do you see, we certainly are seeing monetary divergence there, where there's a pivot away from the dollar and away from dollar denominated trade between countries, trade settlement between countries in those two realms. Do you see a marked difference in the economic direction of basically the economic activity, economic prosperity, how those Western countries that are still clinging to the dollar and its system and its keepers versus those who are pivoting away, including China, Russia, and in their circle of influence, as far as economic prosperity or progress going forward?
Sure. Well, if you look at it at a macro level and worldwide, there's really a bifurcation that's taking place between the BRICS countries and the Western countries. And we're on the cusp of seeing the BRICS countries announce their own currency, and just as importantly, their own equivalent of the SWIFT system and credit clearing circles. And at the macro level, credit clearing is actually one of the most important things that's going on in the background. And right now, credit clearing is controlled by the West. If an alternative credit clearing circle system exists and an alternative to SWIFT exists, then we can see the dollar dominance, the real hegemony of the dollar disappear very quickly. And I think that the BRICS countries are very close to announcing that. And I think that with the blockchain, they can make all of that happen fairly quickly. So I think folks need to recognize that dollar dominance is not going to last forever. And, and there's going to be some crises. I think we're on the cusp of a crisis right now in both France and Germany. China is already in the middle of a crisis. They're actually in a deflationary crisis in China. But we could very well see a major crisis monetarily and the rise of an alternative coming out of the BRICS countries fairly soon.
If we could turn our attention to healing a different divide, and that's within our own country, more and more of the guests whom I interview talk about fractures across many different axes in our country, whether it's different aspects of political or financial, racial, all kinds of different divergent groups that where one can almost look back and say, how, as Lincoln reminded us of Scripture saying, a house divided against itself cannot stand. What are your thoughts about the necessity of finding where we can heal divides and come together as Americans, first of all, and secondly, where you see that the most promise that is happening, or that we can lend our shoulder to an area where there's already progress being made in that direction?
Well, I'm still very hopeful in the political process in the United States, and I'm still hopeful about true dialogue in our country. The problem that we've run into, especially all through the Biden years, is that the whole concept of dialogue was replaced with a lecture. We were being lectured to by the Bidenistas, and they really didn't want to talk. They didn't want to discuss. They didn't want to find a common ground. They just basically wanted to browbeat all right-wingers and say, I'm sorry, this is the way it's going to be. And if you don't like it, you're a racist. And if you don't think that we have special rights and privileges, then you're a homophobe. They kept with this over and over and over again, all through basically the last, 4.5 years. They tried to push conservatives off to the side and pursue their own agenda. They didn't really care to debate. They just wanted to lecture. Now, most recently, in the aftermath of the Charlie Kirk assassination, I think people are recognizing that they don't want the pendulum to swing back the other way and have right-wingers dictate to left-wingers. One of my greatest fears is that we could see pendulum swings in this country, if you look at presidential administrations, become more and more pronounced, where basically each incoming president would immediately undo every executive order that was done by his predecessor from the other party. And this would go on over and over again to the point where at some point, the entire political process might break and we might end up with a pendulum freeze, most likely to the left, where elections would be suspended. They would claim that there was like massive election fraud or whatever, and say, "Oh, well, we can't trust the electoral process at all. We can't trust the vote tallying. We can't trust any of this. So we're going to declare martial law, and the next president would in effect be president for life." That's the worst case scenario. And that's my greatest fear. I am hopeful, though, that we can get back on track in this country, and that there could be true dialogue, and that people would realize that they can't demand special rights, that equality is not equity, where people need to be treated truly as equal. People need to be judged as individuals, not as groups. And setting aside special privileges for this or that or the other minority, or this or that celebrity or whoever, can't go on. We can't operate that way as a nation. It's not the way our nation was founded. It's not what was intended. It's not really what it means to be an American. We truly want equality. But right now, if you preach equality, people will call you a racist because you're not showing equity. It's really an ugly situation. And I'm hopeful that we can get back on track, but that's going to take people recognizing that they were abusing their power and influence.
So areas where you see progress being made towards unifying around meaningful principles that restore basically what it means, what has always meant to be an American and allow people to flourish. Any bright spots in your view?
Well, yeah, hopefully we're going to, like, for example, the whole situation with Charlie Kirk pointed out one of the great ironies of modern life, and that is people talk about having open and honest public debate. But when someone actually debates openly and honestly, like Charlie Kirk, he was there talking face to face with college students who had been indoctrinated and pointing out the folly of some of their positions. That wasn't good enough for them. They wanted him dead. In fact, they want all of us dead. So when you see what happened to Charlie Kirk, it's kind of a microcosm of the goals of the globalists and the whole woke movement, the BLM movement, the whole schmeal, where the people talk about debate, but they don't really want debate. They want that lecture. And anyone who truly pursues debate gets a target on their back. It's really sad and disheartening. Hopefully everyone can learn from that and we can get back to true debate.
In the past, you've been an advocate of people doing strategic relocation to the northwest of the U.S., seeking some homogeneity of spirit in the sense of wanting to get back to the rugged self-reliance and agrarian roots and reliance on cooperative, supportive communities helping each other, that kind of thing. What do you see as the most important elements at this time for people to be striving towards in that regards?
Well, first to clarify, it's not the Northwest, it's the inland Northwest, because the coastal Northwest, Western Oregon and Western Washington are quite liberal. But the inland Northwest, I still see as a true American redoubt. It's where old-fashioned values are still respected. And if you look at the demographics, a huge number of conservatives are still moving here. It's where I chose to live, and increasingly, people from blue states are moving to red states, a lot of them in the inland Northwest, a lot, of course, in Texas and in Florida. But states like California, Oregon, Washington, virtually the whole East Coast, at least within 50 miles of the coastline, is quite liberal. And there's all the other, of course, liberal bastions like Chicago and much of and urban Colorado, for example. But the rest of the United States is still essentially bedrock culture, old-fashioned traditional values America. It still exists. And I do encourage people to vote with their feet. because as time goes on, I think the blue cities in particular and blue states in general are going to become less and less inhabitable for anyone who wants to pursue, traditional American commerce, free enterprise. It's just the opportunity won't be there anymore. It's being taxed out of existence. It's being regulated out of existence. And I think that people still have this window of opportunity to make a move to a lightly populated, agrarian, conservative area. And there's lots of them. They're in Appalachia, in all through Tennessee, for example, in inland Northwest, the Four Corners region. There's a lot of areas that are, and parts of Texas, of course, are quite conservative, and they are welcoming people who are true refugees from the blue states who don't want to bring blue state politics with them, who truly want to embrace what it means to be an old-fashioned American. And I encourage people to go ahead and make that move. That window of opportunity is still open. But if we wait until there's a real estate crash, that opportunity is going to evaporate for a lot of people because they will lose the equity in their homes. It's time to take that equity, and in many cases, for people moving out of California and New York, for example, you're turning a house on a quarter-acre lot into a mansion on 40 or 80 acres here in the American Redoubt.
Those who are waiting to make their move, you're saying that you're expecting a significant setback in the overall real estate market, where it's going to be very difficult for sellers if they're not early movers. That's what you're saying.
Yes, I think we're seeing just the beginning of that. It's kind of a nascent crash, and right now it's only in a few metro areas, but I think that'll spread, particularly in blue states. And once that takes off, we're going to see a general decline in real estate that'll affect, all the markets at some point. Because to step back to what I was talking about earlier, at some point, the Federal Reserve is going to be forced to raise interest rates to garner any kind of support for U.S. Treasury paper. We're so deeply indebted as a nation, we have to keep turning that paper over. If foreign investors won't buy that paper unless interest rates get up north of 10, 12, 15%, the whole game is over. Because once interest rates get up over 12%, no one's going to be able to afford a house. House prices will revert to their true value, and people are going to lose a lot of equity very quickly, especially in the cities. I think rural residential and rural agricultural real estate will hold up much better than urban and suburban real estate.
For those who want to follow your prodigious work, where should they get connected?
Well, yes, anyone who wants to read up on preparedness or on relocation can go to survivalblog.com. We're now in our 20th year of posting. There's over 31,000 articles and letters and quotes that have been archived there. It's all freely available. Again, it's just the way it sounds, survivalblog.com.
We've been speaking with James Rawles, the founder of survivalblog.com, here on Liberty and Finance. James, as always, thank you for joining us.
Thank you so much for having me on.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for September 15th through September 22nd, 2025, while supplies last. This week, 1 10th-ounce gold maple leaves are just $37.50 over melt per coin. 1 ounce assorted silver bars are just $1.65 over spot per ounce. We also have near historic low premiums on pre-1933 gold. Call us for details. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.